Hello, hello, hello. Welcome, welcome, welcome. I am Latanya Martin, the host of Buying and Selling Nashville, and I'm also the real estate broker and owner of Grand Style Homes, a real estate firm here in Nashville, Tennessee. And this is Buying and Selling Nashville. And today our guest is Shedrick Doss with Southwest Funding. And today we're going to be talking about what are the pros and cons to mortgage loan forbearance. So if you own a home, you know that there were some last year due to COVID that they offered some help for those who need help paying their mortgage, just like they also offered renters a rental forbearance, something to help them with their rental payments. But today we're talking to homeowners who have a home loan forbearance about. Is it something that I should do? Is it something that I should not do? What is it? How can it help me? How can it hurt me? So we're going to break down the loan forbearance today. So, Shedrick, yourself about your company and what you do. And
Yes, Shedrick Doss with Southwest Funding, been a mortgage lender for over 14 years, been with Southwest Funding going on 11 years. We service license and I am personally licensed in Tennessee, Alabama, Texas, and Kentucky. Um, the main thing that we like to do is give buyers and sellers enough information to make a right decision and choice for you. And this is why this podcast today is should hopefully benefit a lot of people.
right. So I have found, even being a realtor, that there are some homeowners who have done this loan forbearance, and they have came to me afterwards wanting to purchase a home. And once I've sent them to get pre-approved, it's caused a little bit of an issue with buying your next home. So tell me a little bit about the mortgage loan forbearance, how it works, and how it can potentially cause you not to be able to buy at the moment.
Yeah, so in March, I think March the 27th, 2020, they passed the CARES Act, which was and part of that was that if you have a mortgage with a government-backed entity, you can get your payments deferred. Uh, so how that can hurt you in reference to what you're saying, and when someone wants to come to me, is you will not be able to, if you're currently deferring your payments, haven't paid them, it won't be a negative mark on your credit report, but you won't be able to purchase a new home or refinance and take advantage of the great historical low rates that we're having right now. So unfortunately, you can't have it both ways. If you're not paying your mortgage payment, you can't buy a new home or you can't refinance. Now, not that's not saying that it's something that you can never do. Um, if you are paying your mortgage, you can be in forbearance or have your payments deferred and still make your mortgage payments on time. And we don't care about that at all. So you can take advantage of that. But if you come to me and want to buy a home or refinance your home and you're currently not making your payments, you won't be able to do so.
Okay. Why would a person utilize this program? Um, have you found that they need it? Sometimes people do things because it's there. Hey, they got loan forbearance. Let me not pay my mortgage for a couple of months. Put it on the back end. Da da da. Or some people do it because that's what they need. They've lost their job. They lost their position. What is a reason that people should do it, or possibly would be a reason for them to utilize this option to help them?
Just like you said, the CARES Act was passed just to help someone in uh, a financial, not in a financial situation to pay their mortgage. So if you're currently working and still making the same income, you should not put your loans in forbearance at all anyway, because your loan service, a part of the CARE Act, you have to attest to them that you're in a financial bind that you can't make your mortgage payment. The good part about it, if you had lost your job, your hours are cut dramatically. You can enter into this, and the beauty of it is it won't be a late payment marked on your credit report. So if you need it, you can definitely, you should take advantage of it, but it's not something that you should take advantage of just because you don't want to make your mortgage payment. And I think it's some lenders in part of the CARE Act, I think it was you can get your payment deferred up until 360 days, so almost basically a full year before you have to make a payment again. But the beauty of it is, if you're in a financial bind and you can't make your mortgage payment, you won't be marked late on your credit report. So when things pick back up, and if you want to buy or refinance your home, your credit scores won't take a hit because you won't have that late payment on your mortgage. And having a late payment on your mortgage, it typically takes a year, 12 months before you can refinance or buy another home with a late payment on there typically. So that's the beauty of it. It won't mark you late.
Okay. But it will be on your credit report that you've done it. Is that correct? It just won't have a bad adverse effect. Is that right?
What I've noticed on the credit report, while you currently in the program, it will notate that, and once you're out of it, it will report normally. But it depends on the servicer that has the loan. So each company that offer the forbearance have their own guidelines of how they want to interpret it and put it on your credit report, or how they want you to pay it back. But
Okay.
while you in it, it's typically on your credit report while you're in it.
Okay. Now I know in the past sometimes your car lender will sometimes send you that deferment payment and put it on the back end. So is that similar to what this is? They defer those payments, and as you mentioned, it could be up to 12 months. Do they put it on the back end? Do they how's that interest calculated? Is it based on the same interest that they have right now? Is it at a lower interest rate? Tell me about how that affects it as well, the repayment process and how that deferment is having to be repaid.
Great question. That is based on the lender. So I've encountered some lenders saying you got to pay all the amount that you had deferred. You deferred it for 3 months and your payment is $3,000. You got to pay them that $3,000 plus the fourth month mortgage payment at that time.
All
I
at once? Lump.
all at once. Yes.
Wow.
So the key is asking the right questions, how you need to be pay this back. I had a lady call me the other day, and what they did was the servicer that she has, they put a second lien on her home. So she had to record it in the courthouse and everything else. So she would be paying that back. Or most of the time, that second lien just stays out there, and it will accumulate interest depending on the lender, what rate of interest it will inquire. But you put it on the back end, and it just be out there. So if she wanted to sell her home, she will have to pay all that back at one time, whatever that lien will be. So the key is nobody's going to give you anything for free. So it's a temporarily deferment, and I think that's why the government did it. So people that can pay, is really no incentive to defer something that you're going to have to pay back, and possibly with interest. So if I'm able to pay my mortgage payment, and I just want 3 months off, and then if my current servicer is stating that, okay, they are the ones that want all the money back in 3 months, so now I got to pay basically four mortgage payments at one time. And what did I do with that money in between? Probably did nothing, and don't have nothing to show for it. And now I'm stuck and possibly can go into foreclosure, which will be a bad situation for everybody.
Right. Um, so here's the thing. If you're looking or thinking about using this loan forbearance as a way to help you with what you have going on, check with a mortgage lender first, because it could be some other options. There's refinancing, and using some of the equity in your home to help pay down or cash out. Let's talk about some other options, Shedrick, that are available. I mentioned a few, but go into a little bit more detail about some of the other options besides the mortgage loan forbearance. So if you've been paying on time and you're thinking you're not going to be able to pay, or you're thinking, hey, I might not have my job long. I don't know, but as long as you're working right now, you can still do some other options. There are some other options available. So go ahead and talk about some of those as well.
Right. And the options are just like you stated, it's going to be for the people that shouldn't that can make their mortgage payments right now. Right. So you can refinance and get a lower interest rate. And depending on how we can, and here's another thing, say you want to refinance your home, and we can refinance your home in January and close in January, and you don't have to pay your January payment nor a February payment, and your next payment will be due in March. So it's not even a forbearance, it's doing it the right way. So you can still get 2 months free if you wanted to do it, and then get a lower rate. So that's that's one option for you as well. Get Home prices are skyrocketing, so most people have a ton of equity in their home. So you can refinance, still possibly get those 2 months uh, off with no mortgage payment, and have extra cash in your hand just in case something do happen with your job, but you're currently fully employed now. So now you don't have to go in, worry about that deferment, or and what they're going to charge you on the back end, or do you have to make all the payments up at one time. Those are the better options. So talking to someone, a professional, to give you all the pros and cons so you can make a right decision for yourself, just not because your next door neighbor for went into forbearance, you want to do it as well. Your next door neighbor may not have a job. So you shouldn't jump on it just because. And again, you have to basically tell your mortgage company that you can't make the payment. They're not really researching it right now in reference to seeing if your job is lost, but you are telling them, hey, I can't make the mortgage payment. But if you can, that's really not benefiting the mortgage company nor yourself. So there's other options out there that you can benefit that actually can be a huge gain for you all the way around.
Right. So you really have to ask yourself, what is it that you're wanting to do? If you own a home, are you thinking you want to downsize? Are you thinking you want a bigger home? Are you thinking you want to move? Are you thinking, hey, we're in COVID. I'm here. I'm stuck in this house. I need to make some changes to my house. I need to do some things. There are so many other options besides doing the loan forbearance. Again, if that's the way that you need to go and it works for you, make sure you fully understand what happens at the end. Do you have to pay those 12 months or 6 months at the end in a lump sum? Do they allow you to pay it in the monthly installments? How does that work? Make sure you understand all the details of how that actually that repayment plan will go before you get into that also, and know that there are other options. So typically when I have a seller that wants to sell their property and move to another, before we even get to shopping, again, it's about seeing where you are and how much you can afford. And then you also have those clients that have enough equity where they may want to buy something cash. That's an option too. But again, because home prices have increased, depending upon how much equity you have in that home, also may make a difference in where you move to and what type of property that you obtain. So many things to think about. That's why it's important, one, to make sure that you have a consultation with your realtor so they can break down these things to you, as well as have a mortgage loan professional who's able to help you understand your choices. Because even though, of course, as a realtor, my goal is to sell your home or find you a home, I also want whatever's best for you and the options that are best for you. So that's one reason why we do these podcasts, is to just tell you what your options are so that you can make an informed decision on what's best for you and your family. Definitely wouldn't want you to go from bad to worse or to a worser situation. And again, with these uncertain times, we never know how things may go. It just so happens, even with real estate, a lot of people, a lot of realtors were assuming, hey, we're going to have a lot of foreclosures this year. It's going to be really slow, but it wound up not being slow. We had a lot of people really getting their self together, their credit together, their finances together, to be able to really go ahead and buy a home if they did not own one, or buy another home and move up to a different home if that's what they wanted to do. So there's options out there. Again, always seek advice from a professional. Get someone who can help answer the questions that you do have. And and we both encountered buyers or clients that have done this. So I don't know if you want to just give a little bit, a vague experience of how, it affected a buyer or seller. Shedrick, up to you. Or if you wanted to just give any, closing statements or anything.
Yeah. So, example, I had someone that wanted to sell their current home and buy another one. They were in financial shape to do that because they were able to get pre-qualified. But once I asked the questions and saw the credit report that their was in deferment, I didn't decline them, but they had to make their mortgage payments 3 months on time before I can do something. And of course, properties are staying on the market not even 3 hours. So 3 months it definitely is not going to work. So, and of course they was upset, and a lot of them don't understand the ramifications of deferring your payment. You just think of it, hey, I have a $1,500 mortgage payment. I don't have to pay for 3 months, 5 months, 6 months. But it had a negative impact on them getting pre-qualified and pre-approved for a home. I had someone that wanted to refinance their home because they had lower payments. They wasn't able to do that because they were behind on the well, not behind, but they had their mortgage in forbearance.
Okay. And just a quick side note, interest rates are the lowest that they have been.
Mhm.
Are the refinance rates similar to the new purchase rates?
They
Um,
are.
and what are the average, generic estimate of rates right now? I know you can't
Right.
be because they change like that too, right?
Right. If you have, let's say you have high seven credit scores, you can get rates as low as maybe 2.3, 2.4, 2.5%. They are kind of sort of trickling up a little bit, but that's where they are.
Okay. And what do you need if you want to get pre-approved? What are some things that you need to see? And I also know that for those that are self-employed and maybe haven't filed a couple of years of taxes, there are some other options as well. Um, Tell me what you have. What do you need to see from someone if they are wanting to purchase a property, purchase a home?
The pre-approval process is fairly simple. First step is, of course, we look at the credit report. Credit score is good. Then we look at your income, like pay stubs and W-2s, and then we go over different program options, what you approve for. So you may need a down payment, possibly you may not, but we need bank statements and everything to kind of show what you can be approved for.
Okay. So it sounds really easy and sounds simple, but I will say that with anything, it can be stressful. So, it's the best time of your life. It also could be the most stressful time of your life, but we'll get you a home, right? We get you where you want to be.
Right.
So, if you have any questions and you're watching this on Facebook, definitely inbox or DM Mr. Doss or myself. If you're watching this on YouTube, you can get in contact with me via latanyamartin.com or whichever way you need to get in touch with me or Mr. Doss. Get in touch with us if you have any additional questions. We have I get questions from other realtors, so I mean, we don't mind answering those questions and helping because that's what we do.
Right.
So I definitely appreciate you all tuning in. Did you have any more closing words, Shedrick, that you wanted to mention?
No, what I always like to tell people in reference to buying a home, like you said, it's not easy. If it was, everybody would do it. But the key to it all, everybody can get a home. So no matter what your circumstances are, it may be timelines and guidelines to work through to get approved for a home, but you can get one. So it's our job to give you the guidance for free. We don't charge you. We don't charge you for basic information to tell you what you need to do to get pre-approved. So don't be afraid to take that leap, and you're in good hands. And we'll take good care of you. The first step is just seeing what you want to is trying is at least try, and then get the guidance from professionals and see what we can do from there.
Absolutely. And I don't know if you all know, but we used to be on 92Q as Ask the Professional and to answer those real estate questions that you have. So again, we're always available to answer those real estate questions, whether it's credit, real estate, mortgage, um, closing title, whatever it is. Ask the questions because the thing is, if you have something that you need to know, if you never get the answer, you won't know one, but you won't move forward. So if you have a goal, let's help make that a reality this year. Things are still moving forward again, even though it's COVID, interest rates are lows and the houses are selling. So give us a call, whether it's a mortgage forbearance question, refinance, whatever that could be. We're here to help. Again, I'm Latanya Martin, the broker owner of Grand Star Homes and Shedrick Doss with Southwest Funding. And we appreciate you all tuning in, and we'll see you next time. Have a great
Thank
day.
you. Bye bye.